All right, so let's start with the first questions. The first question here, then we'll move on to, we are doing 3 questions. So let's see how it goes. So now we solve the first question. So we have the following that has been extracted in openness and in the books of Opener. So you say Opener Enterprise, all right? So like in the books of Opener Enterprise, all right? Okay. Then, like I said, you open the sales ledger. So you are here to prepare the sales ledger control account. Then at the same time, so you don't hasten, you just do at the same time the purchases ledger control account. So you do the two concurrently. Okay. So now back to what we've been doing in the part one, the video in part one. You realize that we have this credit sales. What is the source of the information from the credit sales? Where do we pick credit sales from? You remember the sales day book. Is that not it? Exactly. Where do we pick the return invoice from? Return invoice day book. Is that not it? So these are, you should know the sources of the information. Okay, so basically that is that. So all we need to do is to just pick the figures and know which of the control accounts we are putting it in, then straight. We just fix them one by one. So let's put in our CD sign. CD sign. It's very easy. Control account is something that you should be able to grab all the marks under. So you pick the item one by one. So we start with the sales ledger balances. So you know what? Sales ledger, debit or credit? It's obvious. A debit balance, is that not it? Because you are picking it from the individual debtors account. So balance brought down. That is because we are preparing this thing for 2020. This is the end of last year. The balance carried down for last year. So the balance brought down is what we will have here. So that will be 92,250. That's what you have. The same for the next item, purchases ledger. So you don't hesitate. Straight. Purchases ledger. Balance brought down 84,110. That's all. Sales journal. What does sales journal do? Sales journal records the account of what? Credit sales. All right. So straight away, if it is a credit sales, you saw where we record it, right? Credit sale. And please, let me by here say that this is credit sale. We don't bring cash things in this sales ledger. It should be credit. So if I give you a total sales, you have to fish out only the credit part to bring it here. Take note of that because these are part of the examiner's trick. All right. So that is that. This thing is about credits. Anything cash doesn't come here. Number two, anything provisions doesn't come here. Provision is not a reality. You are just assuming in your head. All right. So it's not a reality. So we don't bring those things here. All right. So now, sales journal, we have 110,210. Purchases journal, obviously. So if you understand what you are doing, you will know that it is very easy. You are just putting in the figures. That is 100 and what? 100,600. So that is that. Discount received. Who do we give discount received to? Discount received. The discount received is something we receive from our what? Suppliers? Exactly. So that is that. So you will receive the discount just to reduce your payment. So 4,500. What about the discount allowed? It's something you rather give to your customers. So sales here supposed to reduce this one, discount allowed. So that is like 4,500. Is that? No. 38. That is 3810. That is that. Return inwards journal. You remember what it's about. So return inwards to be here. Just to reduce what, because you have returned some of the things. So you're supposed to reduce your credit sales. So return inwards 8700. That is that. Then there is return outward. You should know where it should be. Return outward. That is 5450. That is it. Then bad debt written off. It has already been written off, so it means that we are reducing our debtors figure. Bad debt written off is 6720. Cash sales. Do we record anything cash? No, because the ledger, sales ledger, is for debtors issue. So we don't do anything cash sales. The customers gave us a check received. So it means that there is a receipt from the customer. And how much is that? 75,690. We also issue check to the supplier to reduce our figure. So that is a payment, which is by a bank, the check. So that one is 60,050. Guess what? We had to refund to the customer. Now, if we are refunding to the customer, what does it mean? It means probably the money that they paid us here is, oh, sorry, I think I've made a mistake. Good. I swapped the things. You see how dangerous it can be? This is it. Good. So if we are making, if the customer pays something, you receive something, it's supposed to reduce the balance. Take note of that. Don't let it happen to you, because by the time you probably realize it, you are wrong. So you have to do the switch. So now that we need to, if we are refunding, probably that it means that this money was an overpayment. We are refunding how much of that? 1850. All right, so that is that. Then interest charged to debtors for the month. So that also means that if there are any overdue, that one should increase their money that they are owing us. All right, that is 220. So basically, that is that. Cash purchases we are not interested in. Dishonored checks, where do we keep it? So probably it's part of this, and we are dishonored. And please, this one, you have to be very vigilant. Sometimes it has to be specific. Customers check dishonored. So dishonored checks, that is 5,700. All right. Do I have it correct? That is it. Bills receivable is like a draft, which is meant to reduce the figure. So this is 25,400. I told you we don't do anything with provisions, right? Bills payable. You see another mistake. So you see what I just did. So if the bills receivable is even here, then it means that I should be. So it's supposed to reduce my payment. So writing in a rush sometimes can cost you. So bills payable is here. But if it is dishonored, it will goes to the other side. All right. So that is that. So we have 18,200. Here, the understanding of these bills is like a draft. That is what you need to understand. All right, like a draft. Okay. Because normally, because the word payable is part, it presupposes as if it is increasing your balances. All right. But here, the understanding you is good. We even use those words like a draft. All right. So that is that. There, that's the understanding that you should get from this. All right. So that is that. So we've given you that to deal with these kind of things. All right. So now I think we are done. There is just a setup. What will the setup be in the debtors ledger control account? Exactly. So it's supposed to reduce the. So we have the set off here. How much are we setting off against each other? 17. All right. So here to set off. In this question, we were not giving closing balances. So it means we can go in and balance everything ourselves. All right. So if you look at this side and this side, which one do you think will be bigger? So even with your eyes, you can see that this side is bigger. You can see clearly it has 100,000. So 100, 600 plus 84, 110. If you add this, I have something like 184,710. So it means this side, balancing of account, don't forget 184,710, which means that if I add and there is a difference, that will be my balance carried down. So I have 4,500 plus 5450 plus 60050 plus 18,200 plus 17,710. If I add it up, it's 105,910. If I deduct it from 184,710, I have 78. That's the top up. Should be my balance carried down here, and my balance brought down 78,800. So you should be able to do this side, won't you? You look at these two, which side will be bigger? Obviously, you can see that this side is, the debit side is bigger, and normally should be so because it's a debtors ledger. All right, so if I have 92,250 plus 110,210 plus 1850 plus 220 plus 5700, I have 210,230. So that should be the figure here to 230. And if I add this and subtract and it is not up to, then that is my balance carried down. So 8700 plus 6720 plus 75,690 plus 25,400 plus 17,710. I have 138,030. So if I take it now from 210,230, I have 72. So this side needs a top up. So balance carried down 72,200. Therefore, balance brought down is 72,200. Easy peasy, you are done. Let's quickly take a look at another question. And so we want to take this question quickly. All right. So this one will be in the books of Muntie. Basically, that is that. So quickly, we open our sales ledger control account. See, if you know what you do in this control account, it will even take you 10 minutes. You will finish in the exam quickly. So purchases ledger. All right, so this one we have December 2015, but we are probably preparing this account. All right, also in December. So everything is in December 2015. Now we have these balances. Sales ledger balances 1st January is this, and they've written debit to it, and this one is supposed to be at the credit side. But you see, one thing you can know for sure is that even with the opening balances, when you look at the sales ledger control account, the bigger one will always be at the debit side. And this one too, the bigger one. Where is our figure? The figure is missing it. I guess this is it. All right. So you definitely know that the bigger one. So for example, this is the purchases ledger. You know that because it is always credit balance, the bigger one will be here. So you see credit. Then this one, the smaller one that they've given you 12. All right. So take note of that. Just put your currencies there. There's the need to put zero zeros at the top. Just do that. All right. So let's go to the sales and record the sales one. So the sales ledger too. So we have balance brought down. So you can repeat what you see. Okay. Balance brought down is 20,040. Another balance brought down. Credit, as they see, is 56. So you have done with the top. The rest, for you to fix them quickly, we have sales on credit. Credit sales, we know where we put it. Supposed to increase our debtors figure. So that is 124,600. Easy peasy. All right. So we have bills receivables accepted by a customer. So basically that is that. So here, this is a customer's bill. All right. So it's easy for us to slot it in. All right. So basically that is that. So if a customer gave you the bill, all right, and we are looking at it, so we have the payable side, then we have the receivable side. So the bills receivable, so usually we should accept it from the customer. All right. So kind of check that. All right. So this is a bill receivable. So it means you accepted it. So let's say bills receivable accept. So you can just scratch this. You accepted the bill, all right, which means that when the time is due, you will just go and slot it in and use it for your payment, okay, as the customer's payment, all right. So basically that is that. So if the bill is received, then it means that we need to reduce the customer balance. Now that is the bad debt is also there. Bad debt is 204, right? Purchases on credit. So you go to purchases. Credit purchases. What do we have? Purchases is 95580. Is that not it? Then you gave a customer a credit note. A synonym of a credit note is what? That you are crediting the customer's account. It's just like a return inwards. Good. Credit note 840. Customers check this dishonored. So this honest check. So if through payment, so this honest check 500. Bills payable accepted. So it means the supplier accepted the bill. So bills payable accepted. To reduce our balance, how much is that? 6660. All right, then provisions. Don't forget, we don't record anything provisions in contract. Cash purchases also is irrelevant because here we are looking at credit stuff. Then we have a refund to a customer. So how much? 2320. Debit or credit? Obviously debit. Why? Because it is reducing some of the money that he paid. So refund to customer. Credit customer. That is 2320. If I see it correctly. Yeah, then the payment to trade account payable. So we made a payment. So we need to reduce our liability with them. That is 93,685. Cash received from credit customers, which means that these people also made payment of cash. So cash received. How much is that? 119,930. Discount received and discount allowed. You know that the discount allowed should be in here, right? What is the allowed? The allowed is 3480. Then the discount received will be here, which is 2850. Cash sales, should we record it? No. Interest charge on overdue account of debtors. So you remember interest. This one is the debtors one. So interest on overdue debt. How much is that? 120. The next item is what? Contra settlement. Contra settlement. You remember a set off the contra. And what is that? How much? I see 978. All right. And what this one is carriage outwards. Do you know what a carriage outwards is? It's not a return outward, it's a carriage outward. So basically, normally, it's another form of expenses. All right. So we have the carriage inwards that you go and buy something. When you are bringing it home, you incur that cost. All right. So you are selling something to probably you carry it out. So now, depending on if it is part of the sales, then it should have been included in the person's invoice as part of his credit sales. Other than that, we don't record it here at all. We don't need the carriage invoice. Nowhere near. That means that we will ignore this one too. All right. So basically that is that. All right. Then we have a debit note to a supplier. Usually it should be kind of a debit note from the supplier. Okay, so just as you had a credit note that you gave to the customer, all right, so the supplier too will give you a debit note, meaning that he's debiting your account, all right. So like a debit note from, let's make it from the supplier. All right, so since the supplier is giving us a debit note, meaning that he is debiting us, all right. So basically that is that. Because we can't give the supplier a debit note. The supplier has to give us the debit note. All right. So we will rather receive those kind of notes. All right. So that is that. So let's make a debit note from the supplier, which means that it is reducing, it's like return outward. All right. So that is that. So debit note. How much is that? 279, right? Then refund to a cash customer. This guy is a cash customer. He will never be in our ledger because the ledger contains credit customers. So this one too is irrelevant. Increase in the provision. Yes, of course, it's an expense, so we don't need it here. It's also a provision. Now you realize that at the end of the year, 31st December, the sales ledger control account has a credit balance. Sales ledger control has a credit balance. So it tells you that I told you when the question says something has a credit balance, what does it mean? It means the balance brought down of that thing should be at the credit. So you have a balance brought down. How much is that? Credit balance of 37. Is that okay? Then if that is the case, then it means automatically the balance carried down of that figure is 37 here. Then it says that the purchases ledger also has a debit balance. Now, if it is a debit balance, what does it mean? It means the balance brought down is 26. That means that automatically there is a balance carried down on that thing also this. So now, as we are done, let's total it quickly. All right. So if you take this side, for example, obviously, which side will be bigger? Looking at this side and this side, because this side will be bigger. So 14,860 plus 95,580 plus 26. That gives me 110,466. Then here 12 plus 6660 plus 93,685 plus 2850 plus 279. That is 103,486. So now if I deduct it from 110,466, that means that the balance, there is a balance carried down here, supposedly being 6980, means that you do the balance brought down of that also here, 6980. So that is that. I think I should leave this one to you. You should be able to balance this one. Obviously, this one will be bigger. Find the figure here. Find the figure here. So when you get the figure, so let's say 20040, it should be faster than me. 124,600 plus 500 plus 2320 plus 120 plus 37. So I beat you to it, right? So 617. Now, if I am adding this side, so here 2 should automatically be 147,617. All right, so I have 56,552, 204 plus 840 plus 119930 plus 3480 plus 978. That is 126,040. That's what I'm having. So you can also confirm at your end. Usually, you see everything. This 8, for example, should meet with this 2. All right, and this 6 you also meet with this 4 to have the last figure 0. So if I do minus 147,617, all right, that means that I'm having another balance carried down here to be 21,577. Balance brought down 21,577. All right, so basically, this is that. All right, easy peasy, and there you go. You should use this same approach to answer all questions. All right, so let me bring you one last question, but I won't solve it. I expect you to solve it. All right, so solve it before we meet. All right, so now this is the question. Okay, so you see the following of Adia Penai Enterprise is given. So here you have total sales. So you need to be very careful. What is the total of a sale? The total of a sale is the credit sales plus the cash sales, but you have been given total sales and at the same time the credit sales. So that should help you find the cash sales. So that should help you find credit sales. And where will it go? The sales ledger. So find the difference and put it at the sales ledger. Don't be in a rush to put it into the total sales, because total sales is the combination of cash sales and what? Credit sales. In ledger control accounts, what do we need? Credit sales. So if you have a total and you have the cash, the subtraction will give you the credit sales. Bad debt, where will it go? The credit side of what? The sales ledger. So put it there. Decrease in provisions. We are not interested in provisions. So you have total purchases too for the period and cash purchases. So the subtraction will give you the credit purchases. So you know what to do. Customers check this earned where? Of course, the debit side of the sales ledger or a control account. Payment to suppliers where? The debit side of the purchases ledger. Cash from credit customers. So it's a credit customer. So you have to credit this cash to the sales ledger to reduce the money. Then we have refunds. The refund, this one is coming from the credit customer. All right, so you refunded to the credit customer. Where will it be? The debit side of the sales ledger. What about this cash customer? We are not interested in that because the cash customers are not recorded in the ledgers. Don't forget, they don't even go to the day books. All right, discount received, the debit side of the purchases ledger. Discount allowed, the credit side of the sales ledger control account. Interest on overdue debt on customers account, the debit side. Why? Because it is going to increase the debt. Set off. So this one will be at the credit side of the sales ledger and the debit side of what? The purchases ledger. Sales returns, that is returning was where? Credit side, right? Purchases return, debit side of the purchases. Further checks review that. So you have sales ledger. So 1st June. So these are actually the, what do we call it? We are preparing this thing for June. So these are the opening balances. So this one, for example, is supposed to be at the debit side of your sales ledger balance brought down. All right, the beginning. This is what you start with. 1st June. This is where you start everything with. And this one will go to the credit side of the sales ledger. And here too, where will this one go? obviously the debit side of the sales ledger, the purchases ledger, and this one will go to the credit side. Then at the end of June, you have this. Please don't forget that you have 0 zeros here and 0 zeros here, but these ones, there are no 0 zeros there. So it means that you should stick to only the 52 and what? The 74. Don't forget that. All right. So that is that. So it says that at the end of the month, the sales ledger control accounts had a credit balance. So it means where will it be? The balance drawdown will be where? The credit side of the sales ledger, and the balance carried down of that will be at the debit side of the sales ledger. The opposite is the same for this one. So do this and balance it off before you meet Prof in the class. All right. So basically that is that. I hope you can carry it out. All right. So we will meet the next lecture. We will meet and deal with how we do bank reconciliation statement. Thank you and have a safe day. Bye-bye.